Welcome to Winning Wall Street's Money. Help support my channel. We need to get to 1,000 subscribers pretty much as soon as possible. So then I go live streaming because YouTube policy, they won't let me go live until I have 1,000 subscribers. Thank you to all the folks out there that have subscribed to my YouTube channel. If you have not yet, please take this moment now with helping me. Click subscribe. Next, click the bell. And next, click all. This helps you receive a notification when I post my next videos. Plus, click the thumbs up button and every time you watch my videos. If you got value from this video, if this was helpful, then please consider sharing a small monetary donation to my channel by going below and clicking on either my Patreon or PayPal links. If you join my Patreon page, then you'll get early access to these videos 24 hours before they're posted on the YouTube and lots more. If you prefer just leaving a small tip, click on PayPal. Either way, then you get that warm sense of satisfaction years down the line knowing that you helped me become a successful YouTuber. Sunday, August 14th, 11 a.m. New York time. Good morning. Going to discuss the S&P 500 beginner's guide. Very broad for beginner's guide. A lot of misinformation to the general public, maybe not the listeners. But we don't know what we don't know. So I will share with you what some people don't know and they ask me. First, what we're seeing here is a trading platform. This is Thinkorswim, offered from TD Ameritrade, which is now actually Charles Schwab. We're looking at 6 grids. The S&P 500. This is a basic top-down, but I'm not going to do it in order. So we're looking at the S&P 500 cash index, symbol SPX, Sierra Papa X-ray. Daily candles, Friday, closed green, higher high, higher low. Big solid body practically, strong like bull. It's in a trend up. Yep, strong. Weekly chart, same thing. Closed green, higher high, higher low. Broke above the supply zone, strong like bull. Trend is up. The monthly chart, we're already in the middle of the month. Currently candle green, higher high, higher low. Already broke above this consolidation, broke above the supply zone. The trend is up, strong like bull. Again, trends don't continue. At some point in time, they do a consolidation. Some point in time, they do a reversal. Here was a consolidation, broke out, trended up, consolidation, broke up, consolidation, broke down. Yeah, where this is going, it's guess. That's what people are doing, guessing. Who really knows? You can use whatever technical study you want to use or any horoscope you want to use. Still doesn't change. We're all human. Guesstimates. Yeah. So it's going somewhere at some point in time. We'll see if it's going to do a consolidation and a continued breakout. But it's strong like bull right now. I just showed you on multiple time frames. Now we're looking at the SPX. I'll explain the difference from here. SPX, it's a stock index that was created to represent the 5 largest U.S. publicly traded companies. I'll say that again. It represents United States 500 largest publicly traded companies. Got it? Publicly traded company means it's listed on a stock exchange. Next, the S&P 500 has 11 sectors in there. Each sector has multiple industries, but remember, the S&P 500 has 11 sectors. I have videos on those. You want to understand those? You can watch those. Those sectors are broad. Next, S&P 500 stock index is comprised of several stock indexes. Yep. You ever hear of the NASDAQ 100? The Dow Jones Industrial Average, the Dow Transports, Dow Utilities, the S&P 100, those indexes are inside the S&P 500. They're dangerous. You know a lot more now than the people that are mainstream media that choose to dumb you down or choose to give you half empty or half full glass of information. Let's go on to the next. Again, these are 30-minute candles. Yeah, actually, let's go here. So this was Monday. See these vertical lines separating the days. Monday, first 30-minute, strong like bull. Rest of the day, trending down. Tuesday, made a new low, broke below Monday low. And then the afternoon made a new low. Smaller trading range, much more of a consolidation. Sure, if you take it on a faster time frame, you see trends. Much more of a consolidation here. Wednesday, gapped up. And the trend went higher, consolidation. The gap did not get filled. Yeah, learn English. Hello. Struggle's real for me. Okay. After Wednesday, Thursday, gapped up. Went a little bit higher. Did a retracement. Little consolidation. And a minor retracement. Yeah, minor retracement. It didn't do the whole percent. Top, bottom. Did a minor retracement. Rolled over. Took out this low. Lower, which ended up filling the gap here. Going inside and closing inside this prior day. A lot of red that day. Yep. And then Friday, gapped up, but we did not gap above the high. You notice here was a high day on Tuesday. When we gapped up, we took out that high. Thursday, when we gapped up, we took out the high the prior day. Well, here we gapped up, but it was inside the prior day. Yeah, so look at these first three candles, building a consolidation. And then finally, impulse move up, strong. Soon as you're going higher, finally took out that high. A lot of trading ideas here. I can recap, go over it. That's my other videos. This is a beginner's guide. Now we're looking at the SPY, S&P 500. What's the difference? I'm going to go over that in a minute. I just showed you the SPX. Now we're looking at the SPY. Same thing, 5 days, 30-minute candles. And now we're looking at the E-mini, ES, /ES, because all futures start with a / E-mini. This is the S&P 500. Again, 5 days. You notice these lighter gray vertical areas. Those are extended hours, and these dark ones are the regular trading hours. Yeah, you could trade this nearly 24/7. That's a beautiful thing. We're the stock ETF. All stocks, the equities, they trade from 9:30 a.m. to 4 p.m. New York time. You're limited where you could trade those. Again, not all brokerage accounts let you trade futures. What's a future? A future is a derivative. What's an option? An option is a derivative. Auto insurance, home insurance, health insurance, those are derivatives. Go over, I have videos explain that more in detail. Just remember, basic category, they are derivatives. Okay, just like the FOREX market, it's derivative of the paper money. So here, I'm going to show you, taking off the extended hours. So now it looks just like the SPX, SPY, regular trading hours. Yep, similarities. But like I said, the ES, I could trade during the extended hours. I could trade the futures contract as well as options nearly 24/7. They open Sunday night, 6 p.m., close Friday at 5 p.m. New York time. Yeah, they do close each day from 5 p.m. to 6 p.m. So they open Sunday night at 6 p.m. And throughout the week, they close for that 1 hour from 5 to 6 p.m. We open 6 p.m. at night, starting a new session, and close Friday, 5 p.m. and don't open until Sunday, 6 p.m. Yep, a lot of opportunities here. So going to zoom in here a little bit on these three S&P 500 financial instruments. There's different exchanges they trade on, different margin requirements, different policies, different fees and commissions. How do you get all that information? You either contact the underlying broker exchange they're from. You speak directly to the source, the person that knows the rules and regulations and can document and show it to you, instead of some guessing game and go in a chat room and having someone give it to you that may give you the misinformation, not intentionally, but because they were misinformed and they didn't do the homework. Got it? SPX, again, is stock index that represents the 500. You cannot trade the SPX as a stock. Got it? No, you could trade options on the SPX. So years later, they created a stock ETF called the SPY, the SPY. So when you hear someone say cash index, they're talking about the SPX. The SPY, they're talking about SPY. SPY, you could trade as a stock as well as you could trade options on it. That's a beautiful thing. Again, the regular market hours. Well, in the futures market, you could trade the S&P 500. There's different size contracts, but I'm referring to the E-mini. There's larger ones than that. They're not called the E-mini. They're called the huge mega. No, they got different names. And then there's smaller ones than the E-mini called the /MES, the micros. Anyway, the ES, you could trade the futures contract as well as the options. Understand this, options and futures are contracts that have expirations. If you buy the stock, they don't have expirations, but they could expire. When could they expire? When they get delisted. And then the stocks you own, there are these things called paper certificates, and they're wallpaper because you can't trade them anymore. So stick them on a wall and it'd be a learning lesson of a bad buy and hold position you made. No, I'm not saying that about the S&P 500. That's bad buy and hold. Just telling you legit the fact. So that being said, a little bit more now. The SPX is 10 times larger than the SPY. The ES, because it's on a different exchange than the other two. I want to explain this to you, and you see this chart. The SPX, 5-point intervals. ES, 5-point intervals. And the SPY, 1-point intervals. You're going to see that in a moment. Let me go over some other things. So when the SPX moves in prices, the price fluctuation from 1 point is $25. Well, the SPY can move in penny points. So each point ticks, but each point be $1, okay? And then there's ticks below the points, but I'm just going to keep it for simplicity, say do points. Ticks are inside the points. There's multiple ticks in a point. Okay, SPX is 10 times larger than the SPY. SPX, each point, $25. SPY, each point, $1. Foreigners, $1 is $1 US. I didn't know that till I got hit the ground right here running. Wink, wink. ES, 1 point is $50. Yeah. Commissions, fees are different. Regulatory fees are different. They're on different exchanges. Some brokers may charge you 0 commissions, but the exchanges still charge fees. There's a difference. You should be asking your broker what fees they charge. Buzzword, keyword, Sesame Street word. Fees. Just because someone says commission, they may be shady, not telling you the fees, the exchange charges. You don't know what you don't know unless you ask, like pulling teeth out. Pull them out and get the answers, because most of them want to dumb down, don't want to do the work. Do your due diligence. Some you will fail because you didn't do your due diligence, didn't communicate effectively. We're humans, it happens. The people get hurt too. Okay, so pros and cons, real fast. The futures, the shareholders of the futures, the big boss, whatever you want to call them, the family, the cartel, yeah, they have high fees to trade any financial instruments through their exchanges. Terrible. Well, the equity market have lower fees, okay? Now, the brokers, that's each broker's choice, what they want to charge commissions, front, back, fees. Okay. Let's go look at the options now. First, we'll look at the SPX. SPX. Now we're looking at a desktop trading platform called Tastyworks. Beautiful. SPX. In the middle are the option contracts expiration. This is another thing, take note. SPX. They have contracts that trade every single trading day, that expire every single trading day. Trading day is the day when the market's open. Yep, that's one different thing from the SPX. Every single trading day, they have options expire. That's why some people trade options that are called 0 DTE, options that expire the same day. SPY, the stock ETF right there, Spider stock ETF. Look, they don't have contracts that expire every day. No, every few days. So there's a difference already, you see? So you can't trade SPY on a 0 DTE every day because they don't expire every day. Look at the ES now. Okay, E-mini. Again, a lot of people spell this wrong. There's a dash between the E and the mini. Look at my heading. I have it correctly in this title of this YouTube video. Yeah. Okay. So look at that. There's strikes. There's contracts that expire every single day. So there are some similarities you see between the ES and SPX. Yeah. Okay, let's go to the SPY now. We're going to open up the one that expires August 15th. That's tomorrow. Options in the equity market trade the same hours as the equity stock. So options and stock in the equity market, 9:30 a.m. to 4 p.m. New York. Where in the futures market, the futures contracts and the option contracts for the futures trade their same hours. Like I said, 6 p.m. Sunday all the way through 5 p.m. Friday. Okay. Now you see here, it says strikes. Look, 415, 416, 417. 1 point difference from each one. 422, 423, 424. Got it? 1 point difference. Again, I said the SPX is 10 times larger. Gonna look at the SPX now. Again, there's a contract expires every day, expires 15, August 15. Open this up. Well, look at here, 420, 425, 425, 430, 5 point wide. Yeah, so they're not 1 point wide. It's 5 point wide. So every time the price moves, it moves in 5 point intervals. So you're not going to get a fill that says, or you're not going to see a contract that says 420, 421, 420, 422, 420, 423. Nope, you don't have those choices. These are the choices. 5 point intervals. As well, when the underlying moves, it moves in 5 point intervals. Yep. So you might be sitting at price. The price might say 420, 18, 23, or the price might say 420, 420, 81, or something like that. But again, it won't fill until it's on those numbers, the zeros or fives ending in. So if you have an issue with that and don't like it, deal with it, or go over to trade the SPY, or the SPY again. You get filled at smaller movements. Okay, let's look at the ES. Again, same thing. Contract expire every day. It's also 5 point increments. It's a larger product. So instead, futures, they're priced differently. They're priced totally different. Yeah, each financial instrument in the future, they're priced different. So what I mean is by that, I just told you the ES, 1 point is $50. There are different financial instruments that are not necessary equity indexes. It might be the commodities, might be the currencies in the futures market. Their price fluctuation for 1 point has a different value. Those are in my other videos explained. Okay, let's go and look here now on the SPX. The SPX, and the one that expires Monday. Open this up. On the left here are call options. On the right are put options. So the underlining on Friday closed here last 420, 42.80, 15, 42. Let's just write 42.80. Let's look for the nearest contract, 42.80 right there. Scroll down. Right there, 42.80. Bid, ask, real fast, pay attention. Bid, ask. All these financial ones have bid, ask. So if you're bullish and you're bullish the position, well, you'll be buying it on the ask. And if you buy the ask, you need the prices to go higher to start making profits. If you're bearish and you think the price is going to go lower, you could buy the ask. And when the price decline, yeah, this ask will go up in value. So 42.80. This contract strike price. The contract is at August 15th. Again, contracts are these expiration dates. Strikes is specifically the contract strike. Again, when someone says contract, they're talking about the expiration period, but you talk about your strikes, which strikes you selected. They have different premiums. Premiums are prices like assurance. You ever have pay assurance, auto insurance, home insurance, health insurance, and you're paying the insurance company, you're paying them premiums, says on your statement premiums. Okay. So 42.80. Yep, look at that. If you're bullish, I'm going to buy the contract. That's the price, 15.70. Yep, that's not $15. No, that's a lot more. That's a lot more. Let's blow this up. $1,570. Got it. Let's put the key. Oh, sorry, that was the SPX. I want to show the SPY. Then 40.27. So we're going to do the nearest contract. 155. Yeah, I know it looks like 1.55. $1.55. Each contract represents 100 shares. That's $155. Let's cue one in right there. Max loss, 155. 155. Got it. Clear. Let's do the ES. 42.80. Right there. Cue this in. 1675. Yeah, it's different. Okay. Look at this buying power effect loss. So again, because this is $50, I know it's kind of confusing. I didn't make it like this. They exchanged it. You take this dollar amount. I know that's not a price. That's the premium, 16.75. And again, I told you this is the ES. $1.50. So you're going to take 16.75 times 0.50, and that's the price. Yeah, I'll show you some other videos to the math too, but that just comes out to that dollar amount, $837.50. Yeah, it's interesting how they make it fuse in that exchange. That number does not match that, but again, there's math involved. But I don't have to do the math, but I did it, check and verify. But anyway, that's the dollar value. That's how much you're putting down. Okay, clear this out. Such some basic information here, beginner's eye explaining to you. Okay, many thanks for watching.